I often talk about the new bank stack or the modern bank stack where traditional companies are collaborating with traditional financial services firms to deliver innovative solutions to end users. What are some examples of where you are working with fintechs?
Yeah. One of the things that we do at Newline, it's kind of how we form our value proposition as we focus in on partnering with some of the biggest, most sophisticated players in the ecosystem where they own the brand, they own the distribution, and we partner to take Fifth Third's core capabilities, payments, deposits, et cetera, and we place them directly at the point of need to accelerate their growth strategies. And so, two examples. One that is probably relevant, given we're in the college football NFL playoff season. We work with companies to help them build digital gaming experiences. And so when you tap pay in, pay out, when you hit that button on the app, you're actually calling out to Fifth Third infrastructure, but it's their brand, their distribution, their experience. We're providing the sophisticated processing capabilities we have at Fifth Third and placing them directly at the point of need in a digital experience to help accelerate our clients' value prop. So the companies we work with, Trustly, Nuvei, Stripe, et cetera, when you're interacting with their digital experience, you are in certain ways interacting with Fifth Third. You're just doing it through that client, that product, that experience. And we work to give them the most innovative, most scalable solutions in the industry so they can scale and not worry about can a banking partner keep up with them from a pace or from a processing standpoint.
And obviously, there's a few banks out there that sponsors fintechs, but how do you make yourself stand out? What's your pitch, I guess, to the fintechs to choose you over others?
Yeah, there's two things that we really compete on and differentiate ourselves. One is just the technology capabilities we have. And so when you're working with the Stripes of the world, they're very diligent and very prescriptive in what they require and what they expect from a technology availability, processing, how many transactions per second, et cetera. So we compete on the ability to scale and frankly move at the pace that a fintech expects to move. And then we also compete on balance sheet depth and breadth. And so once we close the Comerica acquisition, which we have all approvals and shareholder approvals in place today, we'll be the ninth largest bank in the United States. And so to be able to say we have the platform of a fintech, but we have the balance sheet of the ninth largest bank in the United States, those two things together, it's an incredible combination. We say it's 1+1 = 5 at this point, given the depth and breadth we have from a product and a capability standpoint. And then underpinning all of that is your ability to operate in a risk aware and a risk forward standpoint. And so our reputation in the industry is we're a team who knows how to get it done and get it done on the right side of the risk spectrum.
And what do you think will be some of the main trends that we will see play out between banks and fintechs in terms of collaboration this year and why?
It's a fascinating time to be in banking. I am struggling, and I've been in banking 20 plus years now at this point. I'm struggling to remember a time where there was so much going on. And it brings me back to kind of the great financial crisis when you had multiple bank mergers. You had the government that was effectively, saying who the dance partners were going to be. You had people who were trying to figure out, right, what bank should I work with? Where's my money protected? That kind of kinetic energy, I think, now exists in the marketplace. It's different. It's a different dynamic. And now it's more strategic question. Should I go to get a special purpose license or charter? Should I do a skinny payments master account? Should we go all in on stable coins? Should we go direct to Fed? All of those questions are just creating a lot of momentum. And what we're looking at and what we're seeing in the marketplace is the role of a bank may change. It may be augmented in the future. But when you look at what do fintechs value, what is the ecosystem value? They value stability. They value processing capabilities, and they value commitment. And I think if you look at what Newline has done, we've been committed to the space, for over 4 years at this point, and our sponsorship days date back to Fifth Third Processing Solutions that now is part of Global Payments, formerly Vantiv, formerly WorldPay. And so we've been committed to this space for multiple decades. Newline as a business has been around, we're on year 5 now. We haven't left the space. We've continued to grow. And so what we're looking forward to in the future is how can we help our clients navigate what is a really interesting time? Not every fintech should probably have a charter. The impact on regulatory capital, valuation multiples. There's a lot of things that go along with getting a bank charter. And I think what we're really focused in on right now is helping our clients make those strategic decisions, not from the bank standpoint, but more from an industry standpoint, right? Where's the industry going? And how can we help you deliver your strategy and understand the strategic trade-offs that are just facing a lot of these CEOs and executive teams today? Because you see the hype. XYZ company just applied for a license. XYZ company is going to get a bank charter. Well, is that the right thing for everybody to do? And it's one of those, just because you can do it doesn't mean you should do it.
And I want to come back to that in a slightly later question, but staying on the collaboration aspects, what are the most in-demand products or services that your fintech partners are turning to you to help them with?
Yeah, we're seeing a lot of continued demand in what we'll just call like core processing. So what platform growth and scalability do you have for things like real-time payments, wire, ACH, etc., and how quickly and to what extent can you help us scale our growth ambitions? And I think what we're seeing is kind of points of concentration in the marketplace. So your large kind of payment processors, your Stripes, your Fiservs, those companies are continuing to grow, and they continue to need capabilities and platforms that enable that growth. And so it's hard to say, what's the one thing, but I like to deal with it in we're helping them unlock growth and deliver growth. And it could be a card product, it could be a deposit product, it could be a non-card processing product. But the thing that everybody keeps coming back to is how can you help us deliver this growth we have? Because the market opportunity is right now and we want to go after it.
It seems as if a lot of fintechs or even tech companies that want to move into financial services have been on a bit of a journey. Perhaps in the beginning, they wanted to issue cards with their logo on it. And I'm thinking about Uber doing credit cards and now
Mm-hmm.
debit cards. And I guess they're rolling back their credit cards. But a couple of months ago, they partnered with a fintech to start doing small business lending.
Mm-hmm.
So there's a kind of an increasing portfolio, a growing portfolio, I guess. What's next? What do you think is going to be the big volume drivers for you going forward?
I love the question, and I will answer directly here in a second. But I think what's next for us is really company dependent. And if you look at what the market leaders have done, is they have hardened one flow to start. So if you look at Brex has hardened the expense management flow through corporate cards, and they have built just an incredible experience and an incredible offering off of that. And once you have that one flow hardened, then you look at, okay, what's the next adjacent possibility? Is it AI, right? Is it fund storage? Is it access to capital that's not expense management? And so what I see as the biggest thing that's going to happen kind of in the fintech ecosystem, more broadly speaking, is companies will move from the first thing they've done really well to what's the next thing that they're going to do really well. And a lot of times it starts with traditional kind of payment processing, be it card or non-card, and then they move to the next thing because they have the data flow, they've got the distribution, they've got the brand, and they need somebody to help them figure out that next hardened flow. And that's where we spend a lot of time, is helping our clients understand to go into the lending market, to go into the fund storage market. What does it mean, and how is it different from what you do today on the card processing side? So to me, that's kind of the next big thing, is how do you go from hardened flow 1 to hardened flow 2, 3, and so forth? And it's just exciting because now that a lot of these companies have built such good brand recognition and distribution, the canvas is kind of wide open for them. So it's been a really fascinating time to meet with some of these companies and just help them understand, what's the art of the possible given the installed base you have right now.
What's the chicken and egg here? Are the fintechs coming to you for help to do something, or are you pitching to them, hey, look, we now have this, I don't know, stablecoin treasury white label solution you can license, or what's that look like, the dynamics there?
Yeah, we're very proactive in market outreach. One of the things that we've done, which I think is different, and we did it by design, is we thought to be successful serving fintechs, we actually had to build ourselves to be like a fintech. So within the Newline business, we have a revenue organization with its own go-to-market team, its own sales team, its own solutioning team, and then we have traditional product, software engineering, client success, and program management. Those are all within the Newline business. And so we have a lot of inbound. There's no doubt about it, and we have built a reputation of somebody who can do really big things and do them quickly, and frankly keep pace with fintechs, which is fantastic. But we're also very proactive in, we saw this news release, we were in this conversation, we heard you might be doing X. Here's how we can help you with X. And we really push that strategic thought partner, the team who can help you execute on the thinking and help you execute on the delivery. And we can do it with pace and precision. So we talk a lot about pace and precision and focus. Our team is focused on fintechs. That's who we serve. That's what we do every single day. It's all we think about. And when we see articles or we hear things at conferences, we're proactive in helping pitch them on, here's how we can help you deliver that thing that is the next most strategically important effort, at your company or for your business.
And I want to go back to another point you made earlier around some fintechs going on and going out to apply for their own charters and licenses. Companies like Klarna and Revolut are both now getting bank licenses. Do you think there'll come a point where more and more fintechs will follow them and they won't need you anymore? How are you future proofing yourself?
Yeah, I think there's a few ways we're doing it. One is just building deep trusted relationships. I think once you peel back the different layers of the onion to understand what it means to be a regulated institution, it might not be the thing that these companies want to put their resourcing to. Also, when you look at the impact to capital levels, when you look at kind of the P to E trade off, so price to earnings or valuation, multiple trade off between a bank and a tech company, there's a wide gap between how banks get valued in the public markets versus how tech companies get valued in the public markets. So I think for some, they'll probably start narrow, kind of back to the hardened one flow. They might start narrow with an industrial lending license. They may start narrow with a direct to Fed payment processing connection, and they may expand over time. But my advice to everybody is go in with eyes wide open, find the right people to help you navigate that journey. And the banks will still be here to provide, right, lower cost of capital, lower access to capital, the ability to borrow from the Fed. There's things that banks can do because of the licensing and the structure we have. You can't sit back and rest on that license as the biggest moat in the world. And what you're starting to see now is kind of like little islands emerge in the banking license moat. And I think that's okay to put pressure on banks to continue to perform and continue to innovate. I think, the US has one of the most robust financial services markets for a reason, because it's competitive, because it's dynamic, and because you have innovation. And if this is one of the things that spurs that next round of innovation, then we're all for it, right? We are confident in our capabilities and our team. And frankly, the depth and breadth of the ninth largest bank here in a couple weeks. So we're all for the competition. We just want to make sure that everybody's got the right people helping them make the right decision for where they take their company.
Makes perfect sense. Tom, thank you very much for your time and for your insight. As always, super interesting.